Good morning, good morning, good morning, good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango Grove for your daily Bitcoin USD analysis video. It's been a while since I've done one of these daily videos. I've been really busy with a move, but hey, the move is done. I'm all set up. Well, pretty much set up, 90% set up, and we are ready to go yet again with these daily videos. Bitcoin sitting at 16,700, shaking out a lot of the lower time frame traders, while the rest of us over here at the Mango community are doing it the stress-free way, enjoying our stress-free gains. And here we have the Mango Research dashboard available at app.mangoresearch.co. And if you're trading the high time frames, the 4-day, the 2-day, and the 1-day, you'd be sitting pretty with some nice green returns on the 4-day. And the 2-day, we're sitting at around 40% returns. And in fact, we just closed a 2-day candle. So in today's video, we're going to be focusing on the 2-day time frame as well as the 4-day, because the next 2-day candle is going to be a 4-day candle close. And if we do have time, we're going to take a quick look at the weekly, because moving forward, that's going to be increasingly more important, as the volatility towards the upside and to the downside is going to prove to have a lot of opportunity for the traders who are diligent and patient. And again, guys, I do want to emphasize, doing it the Mango way, doing it on the higher time frames is going to be the easier way. Now you're going to get tempted to trade the lower time frames, but I recommend keeping that for when you are a more experienced trader. Look at this, guys. The Mango Research dashboard over here gave us the 4-day signal all the way back on October 22nd. The 2-day signal came a little bit even earlier, right? As well as the daily, all of those came earlier, and since then all we had to do was nothing. Okay, the higher the time frame that you are playing, the less moves that you're going to make, because you have to wait for each 4-day candle to close to get confirmation of a change in direction and change in behavior, right? We've had to literally do nothing since October 22nd. Okay, it's almost been a month of us just sitting and doing nothing, and that's a 40% return since then. If you're trading LTC, okay, Ethereum too, same story. Ethereum and LTC, November 7th, November 8th, since the last trade, and that's been 10 days where you're sitting and doing nothing and you're enjoying your profits. And this is just likely if the trend keeps going, right? That's what trend trading is about. If the trend keeps going, yes, it's going to pull back, but it's just going to go up again. Pull back, go up again until the trend changes. And that's why we use a holistic approach to do our trading, and we don't try to catch the bottom, we don't try to catch the top, we just want the meat of the move. We'll take our stress-free profits and move on, right? That's what we did with the big altcoin rally too. We didn't stress like the rest of the market. We were out of the market while the rest of the market was sitting through that big dump. And hey, we were doing it Mango, and we're getting ready now mentally for the next big run. Now, let's get on over to the charts. We're going to start with the 4-day. You know what? I'm going to go ahead and start with clean chart, because I've not done a video in such a long time, and I want to give you guys a good recap on everything we're talking about, right? So what's the major resistance everybody's looking at? We're going to mark it out on the 4-day to show you guys how easy this can be. And you know what I want to do? I want to go ahead and thicken these lines again. Let's use a line. Is that thick enough? Not thick enough. There you go. Let's use that. Okay, cool. So major resistance coming in around 19,700 to around 19,200. Yes, a $500 difference there, but now we're getting into a volatile zone. Don't get too nitpicky with these numbers. I recommend, guys, pretending Bitcoin is sitting at $19. Okay, put a decimal after the 19 number, and let's say you're looking at 19,891. In your head, you should be looking at it as $19.89. All right, that way you're not too boggled. You're not letting the numbers intimidate you when Bitcoin is fluctuating $300, $400, because you got to be adjusting your trading, your position sizing according to the volatile zone that you're sitting in. All right, for those of you guys who are in the Mango C program, now is the time to be using the Mango risk management indicator, the Mango risk management tool sheet, and all the other theory that we teach in the program and in that module specifically. Right, just use the tool sheet along with the indicator, and it will do the work for you. Do not slack off, especially now with these numbers. All right, okay, so the rest of you though, please, please, please do not let the numbers intimidate you. Pretend that you're sitting at $19.89 and adjust your position size accordingly. Okay, so that's your resistance upside. The major resistance that we're looking towards the downside was somewhere around here, right? Around 12,600. Let's mark it around here. And you can see that we broke it, tested it almost perfectly. You could have, okay, so how do I mark this, by the way? Because I think I did that too fast. We're using these candle closes over here, but you also want to use this push over here, guys. Okay, that's completely fine to do. Marking out a zone is better than marking out a single line. All right, always remember that, especially when you're playing with these volatile areas. So don't be hesitant to mark out a really thick line, so thicken up your horizontals so that way you're not getting too nitpicky with your numbers, or mark out a box. Okay, so this is the box we were looking at towards the underside, and hey, we broke past it and boom, we retested, right? So again, why do I like marking out zones instead of horizontals? If you had to choose between this line over here, 12,500, and 12,760, which were both valid, let's say you picked the wrong one and you picked 12,461, right? Which is fine, but you wanted to keep your chart neat and you decided, nah, I'm gonna mark this line instead because I want to have a beautiful chart for Twitter so I can show off to my friends. If you had done that, okay, instead of marking out this level 2 over here, what would have happened? We'd have had the break, we'd have had the retest, you would have missed it because you would have been looking for the retest of your perfect, beautiful line on your beautiful chart for your Twitter friends, and you would have missed the retest and this beautiful run towards the upside all the way to 70,000, right? And by the way, guys, I do want to mention that I do think that this is one of the longest runs of green 4-day candle closes consecutively that we've had in maybe forever, or at least years. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's 12 4-day candle green closes in a row. We didn't even have that over here. We had some 4-day red days. I mean, 4-day candles that were red, right? So yeah, this is bullish, man. Drifting bullish, drifting aggressively. So okay, so we marked out our lower zone, we marked out our upper zone. What were the key levels underneath over here? Well, what were we looking at? Let's go ahead and zoom in. We were looking at this zone over here and this area right over here, right? Have we cleared that? Well, let's go one at a time. We're going to see how methodical Bitcoin has been this entire freaking run. And you can see that right over here, Bitcoin came up to the zone over here between 15,150-ish to 15,800-ish, right? The zone that we marked out. Smacked at the top of the zone and close underneath both the levels. Okay, close underneath the entire zone. This is a perfect example of why you should always wait for the candle close, because even though we went past the first level, got all the way up to the second level, right? Went through the zone, we closed underneath it. Now on the second candle, we cleared the first level of the zone. And I want you guys to pay attention over here, because this is a pattern that repeats often, guys. All right, when you see this kind of level over here, especially in the middle of two major zones, okay, because if you go ahead and mark this out, you're going to see how this lines up with the center of this range. Between the bottom of the range and the top of the range, this zone over here is the center of the range. In a bullish trend, you're going to see each level of the zone get taken out one by one. Okay, so the first time we came and smacked against the zone and we rejected both, right? But the candle was still bullish, right? It wasn't too bearish at all, at least, okay? It was still a bullish candle in my opinion, especially when you see continuation on the following candle. We closed above the first level of the zone. Okay, cool. But we did not clear the second level of the zone yet. So the zone has not been cleared just yet. Look what happens right after. On the third 4-day candle going into the zone, we closed right above. And now we're using the top of the zone as support. So what's the next level above head? Well, it's actually all the way up at 20,000. However, if you're looking for more immediate resistance that could pose a problem for Bitcoin, there is a level that people may miss out, and that's one right over here. So you see this push down, okay? This is going to be key. This is going to be key, and people might miss this. So let's go ahead and mark it out, and we're going to go ahead and change colors on this one. And let's go ahead and use a reddish orange on this one. Looks too scary. That's better. All right. Okay, cool. So what happened over here? This was the major rejection. This was the major failure to push higher on the parabolic run to 20,000 before we started the bear market. This is a key level, all right? I'm not sure if people are marking it or not, but I am. I'm going to be watching it with a keen eye, and that's coming in at exactly 17,178. You can round it off to around 17,200. So clearing 17,200 is going to be very important for me. If we clear that level, we're likely going to move up to around 20,000. Now, Krisha is looking at a level around 18,200. Now, I'm going to let her come on here perhaps tomorrow, day after, and explain her horizontals. But I wouldn't ignore that level either, because Krisha does tend to get them fairly accurately. So 18,000 could be another level. I'm not looking at that level. I'm looking at this level, and that's how I'll be trading it. Another tip for you guys: try not to complicate your trading by looking at way too many other people's levels and horizontals and diagonals, etc., and including all of it onto your chart. Remember, you don't need to be taking every single trade opportunity. There could be a trade opportunity at 18,000. You don't need to be in that trade. There could be a trend trade opportunity here. There could be a reversal trade opportunity there. There could be an oscillator opportunity down there. Like, there could be so many. You don't need to take every trade opportunity. Trade what you understand. Trade what you love to trade. Trade your personality. All right. So this is what I'm looking at, and of course, I'm looking at several other things. Of course, we can't go through them all, but trade a holistic approach and have a nice rule set for yourself, something that fits your trading style. So that's what I'm looking at, guys. Again, we have everything marked towards the upside and towards the downside. Most immediate resistance that I'm looking at is 17,170-ish. After that, we're looking at around 19,000. I cannot believe it. Underneath, we're looking at support at 15,000. Key levels after that is around 12,800. But I'm going to go ahead and say 13,000 support on a deep pullback is going to be a psychological level that I'm going to be keen to be buying and longing. And yeah, we can wait for that, but that's through a horizontal perspective. Let's go ahead and just look at a trend perspective now. We're going to start with the Mango Dynamic, and the Mango Dynamic, by the way, has been beautiful for us, right? The dashboard, by the way, is based off the Mango Dynamic. The Mango Dynamic itself, the indicator is not available, not yet at the very least. Only a couple of you have access to it. And this has been the trade, right, that we were looking at all the way down over here. When Bitcoin came down to 10,000 and we had this purple horizontal line over here on the Mango Dynamic, we said, hey, when we clear this level over here, when the 4-day candle closes above this level, that's the trade. That's the big bullish trade. And this, I wasn't keeping this a secret, right? Remember, we're looking at this on the 4-day. You guys can literally be looking at this with me. Note it down, note these levels down, and just mark it on your calendar. Like, if the 4-day candle closes above 10,900, there's a long opportunity to be had. Does it coincide with other things that I have? Oh, it does. Okay, cool. Boom. Okay, look at that. Look at that. Boom. And there's another trick, by the way, that we can be using. You see these flat horizontal lines over here on the Mango Dynamic. It's completely valid to be marking that as a horizontal too and trading that. In fact, it would have worked right over here too. But of course, back over here, I did not have the Mango Dynamic. I created it I created somewhere around here, right? Somewhere around this zone. I've been trading it ever since this area over here on all coins as well. But you can see it worked over here. But going back to what I was saying, you can look at the flat arrows of the Mango Dynamic even historically and mark them out as your future support and resistance lines. And it works really, really well. Backtested on all coins too. And I'm excited to be using this for the altcoin rally that is inevitable to come. Hey, we'll talk about that when it does. Okay, so that's Mango Dynamic on the 4-day. Let's go ahead and through a trend perspective, if you're looking at the Ichimoku, there are two trades that we were looking at. One was on the daily, of course, the big one. We talked about this throughout the Mango Seed Ichimoku module as well. It was right over here. The perfect Ichimoku trade that you rarely ever see line up so well. It was right over here. You got the bullish TK cross, everything, okay? Chiku span, everything, green cloud, equilibrium, everything, and boom, 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 boom. It also lined up with the fact that we were talking about an Ichimoku trade on the weekly, and this was this opportunity here, right? Pop on over to the top of the cloud, pull back down to the Tenkin when the cloud flipped green, and boom, 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 boom. Alright, and now we can go ahead and wrap up with the lower time frames. And again, I don't recommend you trade the lower time frames if you are a newer trader. But hey, for those of you who are interested in learning, let's go ahead and we can pretend, right? For our time frame could be looked at as a 4-day time frame, and you're using the chart as a more sped up, right? I was going to say speeded, more sped up version of the 4-day, right? So pretend each 4 hour is a 4-day candle. Just for your learning purposes, don't trade it because you're going to just end up over trading. So what's going on over here? Well, we do have, there are multiple ways to look at it. Look at this. Let's go ahead and change this back to white. So we have horizontal right over here, of course. We had one over here. Of course, we don't want to ignore it just because we've broken past it. We can actually adjust this a little bit now. Okay, mark that out as a zone. I do believe we marked it out as a zone the last time, right? We were looking at it like this too. And yeah, we're looking at it like this. We broke towards the upside, tested this level, came down, accumulated over here. This, I do believe, was a major level on the mango dynamic on the daily. Let's go and check. Let's go ahead and... yeah, so yeah, these blue dots have literally been a buy opportunity every freaking single time. However, we were looking at the 4 hour. Let's not lose track. Let's not digress. And again, this does look like it's flagging, right? I wonder though. I wonder. There's another way you could be looking at this, by the way. Okay, it's completely fine to be drawing it like this too. Okay, and this is a more bearish look at this. Of course, it's only bearish if we break, right? You could be looking at this as a rising wedge or a rising channel. Again, you can call it what you want. Doesn't really matter. The entire point though is that, hey, we are squeezing our way towards the upside, and people are going to say, hey, this is not sustainable. But remember, trends could break. Patterns rather could break towards the upside and continue their trend, right? So a pattern is literally a trend in one direction, and people are saying that, hey, if this pattern breaks, the trend is going to reverse. So usually patterns are a reflection of a trend reversal. So if we actually break this pattern, right, all that's happening is that you're starting a downtrend. Because if we go like this, like this, like this, and then do this, what's happening? Well, you're putting in a downtrend. And usually, especially in a wedge or a rising channel, it tends to correlate with a head and shoulders at the top towards the downside, right? Again, it's not a perfect head and shoulders. It's the psychology of what's happening. And what is a head and shoulders break towards the downside anyways? A head and shoulders break towards the downside is the attempt of the bulls trying to go higher, failing to do so, the bears capitalizing on that opportunity, recognizing weakness on the right shoulder and pushing further towards the downside. Longs, or rather the bulls, start closing their positions, also facilitating a further push towards the downside. That's all that's happening. The psychology of the market participants is what you guys need to understand. The pattern is just a visual representation to make it easier for you guys to understand the psychology of the participants. All right, so yeah, this is not bearish until it actually breaks towards the downside, but it's something that you can start keeping an eye on to prepare for a move towards the downside, or at least start planning, right? We can look towards the oscillators to see if there is a bearish divergence to facilitate further conviction in a move towards the downside, and I'm not seeing any bearish divergence over here. Not really. This is too far away actually, but it wouldn't have mattered anyways. Right over here though, the stochastics crossing, no, not really, right? If you start seeing weakness over here and crossing towards the downside, and we see a close of the stochastics underneath the 80 zone, that would indicate a potential move towards the downside. But again, you're going to have to see levels break, right? If this starts swinging towards the downside, but price stays around this area over here, that's actually going to end up being more bullish than bearish. For example, right over here, we saw a swing towards the downside. We actually did end up having bullish divergence on the stochastics between this area over here and this area over here, because look at that, price is going upwards, stochastics going downwards, and then what do we do? Accumulate in the zone and push further up the channel, right? That's exactly what we could do again. Go downwards over here, accumulate over here, stochastics get all the way deep down over here, end up having triple bullish divergence and break this pattern towards the upside, pushing perhaps past that 17,200 zone, going up to that 18,000 to 20,000 zone. All right, okay, that's one way to look at it. But again, we are not seeing the weakness on the 4 hour just yet. Perhaps on the 12 hour we'll get a little bit more of an indication. And let's go ahead and delete this over here. Alright, and honestly, on the 12-hour momentum oscillators, stochastics as well as the RSI, we're kind of getting mixed signals, right? Because stochastics are swinging towards the upside, so not the worst look over here at all. In fact, this is a pretty good look. But at the same time, bearish divergence possibility on both of them, RSI as well as stochastics. You can see it right over here, right? Swinging down, lower highs, but we have our rising wedge on our RSI. So breaking this level over here at around 16,451 is likely going to give us a retest, right? Especially, okay, how about this? If you close this 12-hour candle like this, and then the next 12-hour candle takes out the low as well as closes underneath 16,483, it's a good chance that we actually come down and test 15,856. Now, what happens after that is going to be really, really key, because if we fail to push back up higher, right, if the bulls fail to continue the trend towards the upside, and instead all we do is give this a retest and push back down, then I'll be looking at next level around 14,751. If we lose that and do something like this, then I'll be looking at around 13,900-ish, which is the 14,000 psychological level. If we bounce there and fail again, what are you seeing here? You're seeing the formation of a downtrend on the 12-hour, right? Which is fine, because then what are we going to be doing? We're going to be coming down to that 13,000 level that we marked out on the 4-day time frame, and you're going to see how this one leg is just going to be, or rather, this downtrend on the 12-hour, which is a composition of multiple legs, is going to be essentially only one leg on the 4-day, right? And now again, those of you who are in the Mango C program and have watched and thoroughly understood the advanced trend analysis, you guys are getting to see a good example of how all of this forms the holistic picture and gives you those big wins and how to get ready for them, right? Okay, so that's pretty much it for today, guys. Again, we are going to be taking it one step at a time, doing it the Mango way, doing it the stress-free way. Again, losing around 15,700, 15,800. We're likely going to be looking at around 14,700 next. Underneath that, we're looking at around 13,900 to 14,000. Underneath that, the next major dip is around 13,000 to 12,777 psychological level. Okay, towards the upside, we're looking at 17,200, 18,100 is the level Krisha has marked, and then after that, around 19,500 to 20,000. I hope you guys enjoyed this video. I'll see you guys in the next one. Throw a like, throw a subscribe. Ciao.